Mr. I. This is our company financial statement for this year.
Alright, thank you, Faz.
Mhm.
See you in meeting.
Yes, yes. See you later. Bye bye.
Okay, boss. This is report our tax obligation for our company.
Okay, but why our tax so high? There is no problem here? No, we checked multiple times and also we checked with the accountant, so there was no mistake in the report. How come this happened? Why our company is non-profit club?
This is true. Our company is non-profit organization. Also, income derived from member is non-taxable. This is what we call mutuality principle. But income from non-member is taxable.
Oh, I don't know that income can divide by two. What is the difference between them?
Actually, our income can be divided by two, which is from our members and non-members. So, if you want to know the detail about it, let me explain about it.
Bismillahirrahmanirrahim. Next, I will talk about income from members and non-members. So, effective from year assessment 2009, clubs and societies are provided with specific guidelines regarding the taxation of their income. Any income that arises from taxation with member is deemed non-taxable under the Income Tax Act. This includes fees and contributions such as interest fees and membership subscription received from members. Additionally, service provided to members for a fee as well as the sales of goods exclusively to members falls under the category of non-taxable income. This exemption acknowledges the internal member-focused operation of clubs and societies. On the other hand, income derived from transaction with non-members is considered taxable. Non-members are defined as individuals who do not possess voting rights at the general meeting of the club or society, where decision and control over its affairs are exercised. Taxable income from non-members can originate from several sources. These include proceeds from fundraising activities or events that are open to public, rental income generated by the hiring out the club halls, facilities or equipment to external parties, and payment made by non-members to attend events such as dinners, talks and workshops organized by the club. Furthermore, any proceeds from non-members participating in charitable events are also subject to taxation. This distinction highlights the need for the clubs and societies to maintain clear records and segregate income streams to ensure compliance with tax regulation. Understanding these guidelines is crucial for proper financial management and adherence to legal obligation while maintaining the non-taxable benefit from members' specific transactions.
Oh, that's about it. Then how about tax payment for this income?
For that one, let us explain in detail. Before I go into the tax treatment of members' income, I want to give you a brief explanation of the mutuality concept. The basic concept of the mutuality theory is that what is written is what a member contributes. A person cannot trade with himself. To apply this principle, those who contribute to the common fund must also participate in the surplus and vice versa. Therefore, it is not taxable if the club surplus exceeds its expenses over the owner's payment. The multi-concept is no longer applicable when trading with non-members, and any surplus may be subject to taxation. Next is the tax treatment of members' income. As for year 2009, any revenue derived from dealings with members is exempt from tax. Any capital allowance or expenses related to such income would be disregarded. It is necessary to keep a separate account for the money received from members and non-members. Any loss will not be taken into account. However, not all transactions involving members are necessarily mutually received. Profit from offering members trading facility are considered to have been earned through business operation. Under Section 4A, they will be considered business revenue and subject to tax.
Next, I will talk about income from non-members. Let's start by defining who are non-members in the context of club. Non-members are individuals who are not entitled to vote at a club or society general meeting and have no effective control over its affair. Trending activities within the club premise often involve both members and non-members. For the tax purpose, this activity considered profit generating and therefore subject to tax. Any dealings with non-members, such as the sales of good or service, rental income or other transactions and result in profit are treated as a business income and must be accounted for as a taxable revenue. Understanding in this distinction is crucial to ensuring proper compliance with tax regulations.
Okay, how about donation made by our company? Can you get tax exemption?
Regarding to approved donation, let me explain.
Next, I will talk about approved donation. So, cash donation made by clubs or societies to approved institution or organization are eligible for tax deduction under Malaysian income tax rules, providing an incentive for charitable contribution. These deductions are capped at 10% of the club or society's aggregate income, ensuring that the tax relief is proportionate to the organization's financial capacity. However, the deductible amount must be carefully calculated using a specific formula, which is total cash donation made under Section 44 Clause 6 times by aggregate income derived from transaction with non-members over the total aggregate income from all transactions, including those both members and non-members. This method ensures that the deductible portion of the donation reflects the club's or society's engagement with non-members. The rules governing this deduction are outlined in the Income Tax Rules 2011. By using this framework, the government ensures that the clubs and societies that engage in broader community or public-oriented activities, as indicated by their income from non-members, are appropriately rewarded for their charitable contribution. This approach strikes a balance between encouraging philanthropy and maintaining tax compliance.
Oh, then how about the investment income that company earn? Is that also exempt from tax?
Okay, for that one, I will explain briefly. Alright, for investment income are classified under specific categories, which is investment income are generally categorized under income or gross income for tax purposes. There are three items that can be considered as investment income, such as interest, dividend, and rents. For tax treatment for these three items, interest and rents are taxable, but for dividend single tier, it will be exempted.
Is there any exemption that we can apply?
What exemption?
Other than that, certain club affiliated with the Olympic Councils of Malaysia are eligible to apply for tax exemption under paragraph 26, Schedule 6 of the Income Tax Act. This exemption provides relief for clubs that meet the criteria. However, proper record keeping is essential. Income from transactions with members and non-members must be recorded separately to ensure accurate reporting and compliance with tax regulations. Additionally, club must be adhere to the tax filing requirements. The tax return must be submitted by the 30th June in the following year of assessment. Meeting this requirement is essential to maintain compliance and benefit from the available exemptions.
So for the next upcoming year, we have to focus on our member instead of our non-members. That's all for today. Meeting dismissed.